Hi, everybody. Welcome to the latest Carson's Take 5. Ryan and Sonu here. Sonu, we got some inflation data this week, and actually, it didn't look all that bad. We've been told for months that the tariffs coming, higher prices were coming. I know you've peeled back that onion. High level, where is the inflation?
The inflation's sort of flat. It's normalized, but there's so much going on under the hood. So
keep it 5 minutes, Sonu. I know you get excited talking about this stuff.
So the big question is, are the tariffs showing up, right? Because we've been told, yes, tariffs should raise inflation. And the short answer is yes, they are showing up, but they're showing up in a few places. Yep. And they're showing up in the places where you would expect them to show up, which is things like household furnishings, supplies, recreational commodities. Think of sporting equipment.
I saw toys also, right? A lot of toys come from China, right?
All of that stuff, right? Also, appliances, toasters, things like that. You know, if you just look at household furnishings and supplies, that includes your washing machine, stuff like that. Over the last 3 months, inflation for this category is up 6% annualized pace. That is pretty hot. Recreational commodities, that's running close to 7%, 6.5%, 7% annualized pace over the last 3 months. So the tariff inflation's showing up, but why is the overall headline inflation on the softer side? Well, we have a few other things, big categories pushing against the tariff impact, right? Some of it is good. Some of them it's not great news. The good news is that you and I have talked in the past about shelter disinflation.
Yeah.
Right. For 2 years or about 3 years, 2022, all the way through 2024, shelter inflation lagged shelter inflation. This is a function of how official shelter inflation is calculated rather than the reality on the ground. That was pushing up headline inflation numbers and core inflation numbers, core meaning, inflation excluding food and energy. That's what was keeping inflation elevated. That's, pulling back right now. We're seeing shelter disinflation finally, about 2 years too late, but it's helping counter, everything we're seeing on the tariff side. The other two things that are pushing inflation lower.
Let me jump in for a second. Let me talk a little more about shelter and then bring those up. I mean, as we've talked about, right? The government looks at, we could spend all day on this. The government looks at the data one way, the real-time data, things like apartment lists, things like Zillow. We're saying rent price has been down year over year for quite a while now. We've been saying, listen, this big part of shelter, which is what, I mean, how much of core CPI is shelter? Sounding like 35, 40%?
44%.
Yeah, okay. So a lot. Okay, that's a lot of it. That's why inflation's been stubbornly high. If you take out shelter, and I get it, it's kind of like take Michael Jordan off the Bulls. Okay, maybe they don't win 6 championships. At the same time you do that, we've been running like sub 2% inflation for a while now, and now finally that's starting to crack. So you're saying shelter's coming back, maybe some goods prices are going higher, and they offset to a degree, but what are some other things you see on the services side? I think probably we're going with this.
Worries me a little bit, and this gets to the fact that we know the economy is slowing.
Yes.
Right. Payroll growth is slowing, wage growth is slowing. That's soft. Hours worked is soft. And if you think about aggregate income growth across all workers in the economy, that's growing about 3%. Right. What does that mean? That means nominal GDP without taking out inflation, that's running probably about 3%. That's pretty soft. You're in a scenario like that, you will not get a lot of demand for cyclical activity, right? Things like, travel. You think airfares over the last 3 months, it sounds like a ridiculous number, Ryan, but airfare prices over the last 3 months, it's down 21% annualized pace. Like I said, it sounds ridiculous, right? If you look at hotel prices, lodging, things like that, it's been declining for 4 months in a row. Prices for hotels and motels and things like that. Over the last 3 months, it's down 15% annualized, right? So this is not an issue about, lagging data like shelter or, how the Bureau of Labor Statistics calculates the data. This is just softness that we're seeing. And that's showing up in inflation that's countering the tariff impact that's pushing up core goods inflation.
So let me jump in. I mean, last week we released the Carson Investment Research mid-year outlook. We discussed why we're still pretty optimistic on the stock market. The economy, we said, is slowing. We still don't see a recession, though, but it's slowing. So I'm looking at the clock. We're kind of getting near the end here. How do we bring all this full circle with potentially, will we see more tariffs coming on August 1st? Will prices jump more then? And how will it impact the big old question, the Fed? Because the Fed has been on pause saying we're not going to cut interest rates because we know inflation's probably coming because of tariffs. How's this all work?
So, wow, there's a lot there.
Yeah, I know. Try doing it in a minute.
So I would say we haven't seen the full impact of the tariffs under the hood of inflation data yet.
Mm-hmm.
That's still coming. We are starting to see the beginning of it. And remember, this is June data, right? Most of the big tariffs went into place. They were pulled back and all of it in May and June. And now there's a whole bunch of new tariffs set to go into effect in August. So what all this tells you is that the Fed is right to wait now. Right, I've been in the camp that they should have cut rates.
We said on these very videos back in January they probably should be cutting. We said
no, exactly. Yeah. And I think the Fed lost its chance. They are in a bind right now. If they signal a cut, what happens? If July inflation data, August inflation data starts to pick up a little bit more, and very well could for any number of reasons, even September, they look really foolish. They'll be like, oh, we signaled a cut, but now inflation's coming in hot. Now it's a rerun of what happened in 2022 when they look
too late Jerome Powell, I think is what he's called on social media by certain people, and it would really look that way. Yeah.
But the problem is they could have avoided this if they'd cut rates back in January and March. Right?
You want to run the Fed? Maybe you can do a better job. You thinking about it?
Yeah, maybe when you're president, you can appoint me.
I don't know. Yeah.
How about that?
Yeah, there you go. So any final thoughts in Sonu before we wrap it up?
I think there's a lot of uncertainty right now with respect to rate policy. I don't think inflation's not, completely elevated, right? There are things that are going up. There are things that are softening. And there are things that are softening for the right reasons and things that are softening for the wrong reasons. Like I said, demand is soft, right? So you would expect rates to come down. We've been in the camp that rates should be lower than they are. But the Fed, as I said, is in a bind, is in a bit of a pickle right now. And, that's why you're seeing a lot of pressure from the White House on the Federal Reserve and Jerome Powell to drop rates. We'll see where that goes.
Exactly. Again, this is the latest Carson's Take 5. Where's the inflation? So we talked a lot about inflation. Let's just high level. The economy's still growing. We're in the middle of earnings season. We'll probably talk about earnings here in the next week or so. So far, it looks pretty solid. Yes, we're slowing, but the labor market's still growing. People are still spending. And literally, the time we're doing this, the stock market's virtually right at all-time highs. So, hopefully, long-term investors out there, we can withstand a little economic slowdown, a little worries about inflation coming up here. Overall, this bull market we're in is still alive and well. And I think that's probably what most listeners want to hear. So that's why we're going to end on some good news. See you by next week. Take care. Thank you.